Hello guys, good morning in Europe, good evening in the States, and this is Ahura. For the last day of this week, we are preparing to start and see to just review the market and see what happened yesterday in the market, what is going on today in the market, and what we have to do while stock markets are preparing to close for higher for the third week in a row as earning reports, especially the earning reports increasing amazing earning reports with the positive in most of the companies with the positive reports. They shock the market, actually not kind of the shock the market, we can say. They increase the market sentiment. I can say that why I'm telling that, because with the very low expectations that the company they put for themselves for the third quarter, because many of the companies at the end of the second quarter, when they publish their earning reports, they put very slower than expected levels of the expectations, just like like if the market, for example, we're expecting if the in a reality we could expect $3 for the EPS, they put the EPS at 2.2 $2.3, so they could beat it. So this is what happened actually in a fact, in the behind of the numbers. But however, since the most of them they beat the market expectations, this positive sentiment helped the stock markets to increase higher. These increasing higher in the stock markets, as I told, with the earning reports, it's happening while the Congress Democrats they failed to reach a deal with the both for the tax and spending bills of the Biden spending bills, because Democrats also are agreed that they cannot bring the Republican they they cannot reach to a deal with the Republican to increase the corporation tax. This corporation tax is something which is not easy to reach it at the current time. At the same time, we are not really sure that they can reach the deal for the Biden's bill as well, even if they decrease again 3.5 to 2 point some trillions, and they are still discussing about the numbers increasing and decreasing. At the same time, what interesting, what most than everything else should should be in the spotlight, and the market participant and in the investors and you as a trader should take care of that, is the interest is the bond yields. The bond yields is reaching yesterday the 10 years overnight, the US bond yields, the 10 years bond yields reached 1.70. This is like highest level since May. These numbers are telling us that we have to, whatever that happened in the stock market, we have to wait for the faster tapering and even the faster rate hikes, interest to raise the interest rates, or the rate hikes, or the rate rates, no matter what you call it. We have to wait for that, because higher it is, this crazy increasing bond yields is something not what the Fed wants, because increasing the bond yields will bring so many other cost to the market, like especially in the construction market, in the housing market. The housing market is one of the biggest financial market that can directly affect any other markets as well. So we have to wait for reaction from the Federal Reserve, and November to November 3 is the time. As you see, yesterday again, US dollar increased. Here is the US dollar chart. As you see, with increasing the bond yields yesterday, US dollar again increased, and this is what's happening in the last days: increasing, decreasing, increasing, decreasing. But overall, after the falling to the lowest level since like in 3 weeks, again US dollar started increasing. This is started increasing in the US dollar right now is more than, if you go to 1 hour chart, it's more above than both 20 and 50 EMA lines. And technically also we can see that in a smaller time frame, in a in a smaller time frame, it's increasing that to have some signals of the higher levels. And if you go to the H4 chart, you can see that it finally is back about the 20 period moving average, and the RSI moves at the 50, around the 50 at 40, almost 7. This and if you go to the OBV trend line, you can see that the OBV downtrend is still not confirmed for the uptrend, but in a 1 hour chart, everything is different. Everything is another signaling that in the shorter and smaller time frames that the signals started the recovery started here, and we can see probably in H4 chart by tomorrow or Monday. In the Let's go to the crude oil. This is the oil report. This, as I told, what happening in bond yields is telling us that the market's supposed to wait for faster tapering, for faster interest rates. These are not going to be the positive for the stock market. These are not going to be positive for many factories and industries. So the factories and industries, since they are waiting for a little bit cool down in the economic recovery, that's why the rebound in the oil prices, in the demand is under question. So for the short time, during the next week, end of the last day of the week, and the next week that we're gonna start in the next week, that we have the latest, the biggest, the highest, the hottest earnings week, that we have most of the biggest companies, especially the against that they're gonna report next week. After that, it is very hard to see the stock market keep continuing the race. So the oil price for the next week also will be positive, something like around these levels. And from the third week, from the week after that, or we can say from the beginning of November, in November and December, while the stock market going to be a little bit crazy, a little bit weak, the oil will be so cheap. The oil chart will be so choppy because the reason is that we will have some concerns in oil market, and if OPEC and OPEC Plus, they do not increase the supply, then this started downtrend in the H4 chart can continue. Otherwise, during the next week, we cannot understand what will be happening in a long term. But for the short term and for today, it is in a downtrend, and we can see the oil price in lower levels. For S&P 500 and other stocks, as long as we are trading above main MA lines in both H1 and H4 chart, we are increasing. We are in a higher level. We are in a bullish trend. And with this earning reports, we can still wait to see the higher levels. Let me tell you something. Yesterday, besides this economic, this like all this earning reports and all the market sentiment and whatever that I told you, we had very important economic data as well. So initial jobless and continuing jobless claims, plus Chicago Fed manufacturing data. What happened yesterday that we could see what the initial jobless claims fell to 290K, which is very low, and we know that it was very interesting, very important that we saw that the employment, the labor market is recovering fine, and we are in a positive, we are in a good shape in a recovery, in economic recovery. At the same time, as I told, we had the the Philadelphia. Yeah, I thought it's a Chicago. No, we had the Philadelphia Federal Reserve Manufacturing Index as well. This manufacturing index fell to 23.8 from previously 30.7, while the market was expecting 25. This weakening data in the manufacturing numbers also this is another signal that we have to take care about the market. We have to take care about this economic situation. So while the labor market slowly started to recover itself, But still, while and still, I have too many questions about the labor market. We will talk about that. I'm trying to make a video at the weekend about the labor market and what is these labor markets telling us, what they mean, if I have a time. But however, about the economic data and the labor market, generally the data that we had yesterday, economic data are starting to have some weakness signal, while the labor market starting to have some recovery. But this recovery will be limited because the change of the, I mean, I'm telling the limited, but it doesn't mean that it's going to be the bad, because the shape of the employment market has changed a little bit. And what we had before COVID-19 is a little bit different than what we're going to have after that. So the kind of the jobs are a little bit changed. So these changes will affect the market. Any other thing? Today, while the today earning reports are important, let me see what else I can tell you. That in China, this Evergrande concern is still continuing. They prepared some money to pay their debt that they had till end of this month, till next week. But still, 20. Oh, sorry, yeah, it was for the 23rd that this 23rd was the 23rd that they had a deadline to pay at the 30th. So like 23rd September they supposed to pay some some what was that? Yeah, let me see. Yeah, I don't know. There is no numbers exactly how much they paid. They paid the last Thursday, and they will have still 7 days to pay their debt that they had from 23rd September, and still they do not have. They didn't show enough liquidity to be able to pay these debts back for the bond yields that they have to pay for the yields of the bonds that they sold. Is something about 33.5 million US dollar. That concern is still putting the stock market in under pressure in China. That's the reason that we can see the Asian market right now a little bit flat. The Shanghai is trading flat, while the Hang Seng is 0.44 and the Nikkei is 0.41% higher. But the Shanghai is still flat, and there is a question again that can they make it or not. But still, as we know, the Evergrande is amazing and a big company, so the Chinese government supposed to help them. There's nothing special. Yeah, we just had a Nikkei, Japanese. Yeah, sorry, we had the Japanese inflation data as well. That shows that let me see the number. Yeah, it grew 0.1% in annual base in September to 0.4% in a month. Sorry, 0.4 to 0.4% in a monthly and 0.2% in annual rate. So the CPI in Japan also is a little bit increased. So different with other countries that we can understanding the Japanese market, Japanese numbers is a little bit confusing. In a cryptocurrency market, let me go to the Bitcoin. As yesterday we talked about the Bitcoin. The weakness in a Bitcoin market is it happened as we were waiting yesterday to see another weakness here. And from this level, since as I told, with the yesterday news, the 2 days ago, the news about the ETF is not something that we have it for the first time in the state, and it's not. I wrote the article about that in the website. You can find the website address down under this video. You can see you can read the articles there directly. In that article also I explained the situation in a crypto market. This not something. This what happened here, as the Gary Gensler told like in the beginning of the week, that they will confirm the ETF just because that they will be able to kind of review and to see the market, what's going on in the market. They just want to control the market. This is exactly opposite with the aim of the bringing the cryptos to the market. You bring them to use and use the crypto markets, because to be out of the control, out of the control of the government's control and stuff like that. So but with what happened in the ETF market with as the Mr. Gary Gensler told, the SEC governor, president. This will put the from the just like legalization, this kind of the legalization, they will bring more review, more, they will put the more in this, they will put the more light on the transaction and stuff like that. This is what this is not what, and the government will be able to control everything, will be able to see what's going on, because it's in an ETF market, and in the ETF market you will be able to see whatever exactly the buying and selling that happen, or you can see all positions. And it is totally different with the as I told, with the aim of the bringing the crypto creators. So this is not something that in the long term can be positive for the crypto market, especially for the Bitcoin. So we can see the demand will decrease for the Bitcoin, and they will move to other cryptos. Probably it will be positive for other altcoins, but not for the crypto, but not for the BTC. This is what happened generally in the market. What's what happened yesterday. Oh yeah, let me tell you on the economic data front what we're gonna have today. Where's my economic calendar? Yeah, here we go. Today the retail is no, sorry. Yeah, today we have the Federal Reserve the chair Mr. Powell's speech. It will be the last very important speech before the Fed meeting, and we have to take care about that. It's going to tell us so many things that what the Fed is going to Fed chair is thinking about the next meeting. Today we have the purchasing manager index PMI from Europe, from UK, and yep, UK and Europe. And then we're gonna have it in the state or not? Yes, and then in the state. Sorry, today we have a purchasing manager index from. Oh, yep, the service PMI and manufacturing PMI from the state as well. So we have the European, UK from the Europe, from UK and the United States, the purchasing manager index, and the Canada with the United Kingdom. They will publish their retail sales number, and CFTC numbers also. At the end of the day, will be at the spotlight in the spotlight. Thank you so much, guys, and let me know please your idea. Please let me write in the comments. Write me please what you want to hear more in the next days. What you want to see, the more data you want to see, you want to tell me what is what these data means for the market, and what you want. Just let me know what you want and what kind of the videos is more interesting for you. I will change in a way that you like it more. Thank you so much and have a good day. Bye bye.